start with the Brent prices, which are currently trading close to 109 a barrel after Chinese data shows that the oil imports have hit a record highs in the last month, raising hopes of strengthening demand from the world's second largest economy. On your screens, 109 just about holding. It is the NYMEX crude oil prices, which also are holding around that $100 per barrel mark. It has been good going for both the crude prices. They are extending their 6-week highs, and you are looking at nearly 2% of gain coming in for this month, or rather 2014, for the energy space. Take a look at the crude oil prices, where you also have seen strength coming in. We did see prices at around $12.95 in the New York session yesterday. The gold prices have given some of those sharp overnight gains as the stock prices in the global markets have rallied, but they still are trading at their highest in last 3 months. There have been assurances from the new federal chairman that there will be no abrupt changes to U.S. monetary policy. Let's get in then. Vijay Bamwani, who is CEO of PSPL India, he joins us on the show with his take on all of those commodities. Vijay, hi. How are you looking at the crude oil prices, first of all? Because the U.S. weekly inventories have been quite bullish for the prices, at least. From here on, at $100, what's your stand?
Manisha, in terms of MCX, I think the day before yesterday high of 6,272 odd levels will act as an intraday hurdle, and at that point in time I don't really mind venturing out a very small quantity in shorts with a clear intention of squaring up close to 6,220 or slightly lower, because 62.75, give or take 10-15 rupees here and there, should act as a resistance in the absolute near term. It's only above a crossover over the 6,330 levels that I think the bulls will start to get bolder, and 63.30 in that case would be a stop on any shorts which are created at 62.75 odd levels. At this point in time, I think crude might just pause for a breather, come down a little, and then we need to take a relook.
Vijay, what's your sense for the natural gas prices? Because as we have been discussing, we almost went to 360. We did see a correction up to 285 kind of levels, and we are holding above those 300 mark yet again. Trading in the middle of all of that, do you see further gains coming in?
Manisha, I remember talking about 288 as a support level, rough and ready support level, where fresh buying would emanate, and that's where it's taken support at and climbed by approximately 14-15 rupees. Now the upside from here is likely to be capped up to 322 to 325 levels in the coming 1 or 2 trading sessions. I don't see a retest of that recent high of 360 odd levels, because that area of price point will attract a huge amount of selling pressure. Further upsides, maybe 15, maybe 20 rupees in an optimistic scenario, but even there I think supply would cap the gains.
Vijay, also let's take a look at the gold and silver prices. While we have seen good gains coming in, it really has been a contrarian call as far as the precious metal is concerned, because many people were calling it as an end of bull run as far as the gold prices were concerned. But even at this point in time, there really hasn't been any buying that has been reported from funds or ETFs. That, do you think, would really be a question mark on the further gains?
I think so, yes, Manisha. I think rally in bullion is likely to be fairly curtailed. And if at all prices do move up from here, they will have to really move up on huge spurts and volumes and open interest both to rope in any kind of a doubting Thomas trader like me who would want to lend his weight on to the buy side. Unless I see a humongous amount of buying, I would be skeptical about any price rise. And where gold is concerned, I think 29,400 or give or take 75 rupees here and there is an area of resistance that I feel the bulls will find a huge amount of difficulty to overcome. On the flip side, if you see prices declining below the 28,600 levels, I think the decline could accelerate actually. And in that case, gold would go down probably to 28,250 odd levels. Silver would go down to 42,500 levels. So I'm actually feeling no hurry or no compulsion in going out there and adding on to any longs.
Vijay, what's your outlook also on the base metal prices? Because we have seen some bit of profit taking there. Having said that, it really is going to be the US retail sales numbers in the evening that perhaps will give you further direction.
Manisha, the retail sales data might give you a short-term impetus which would be equivalent to a blip on the radar for a chartist, and I think the view that I have been advocating that traders are actually cautious. They're not going out there in a gung-ho kind of a fashion and initiating fresh long positions. There is no greed apparent on the screen. Unless that greed returns, I don't see how any rally will sustain. Sure enough, fresh data points might just cause some price volatility of 1%, 1.5% in the absolute near term. But I think that kind of price spurt barely lasts for a session, session and a half before fizzling out. So it's not a sustainable upthrust. If you're a momentum player, an intraday player, you might want to scalp a few trades, but that's about it. And I don't think this rally is sustaining at this point in time.
All right, so that's the view really coming in for the non-agro space, where you have seen more gains than declines coming in for the intraday market there. Let's talk about the agro space now, which has seen a lot of jitteriness in the day-to-day as well. First of all, Vijay, how are you looking at the potato prices? Because that one really was running on the higher side. We did talk about some correction from those higher levels. How has it been trading, and what kind of a strategy would you have on that?
Manisha, the first month futures are pertaining to the month of March, and I see a maximum amount of trader interest in March and April months. Now, if you're talking about levels, I think the 1,075 odd levels for the March month futures to be a fairly strong support at this point in time. However, having said that, I think the upsides are likely to be fairly calibrated also. I don't see prices running beyond the 1150 levels in an extreme or exuberant kind of scenario, because there is a strict or a very severe disconnect between what's happening on the financial futures market and prices at the vegetable markets at the retail shop shelf end. Prices in the financial futures market, I think, are fairly overpriced, and they need to come down, because I don't see prices at the vegetable markets rallying significantly higher from here. So I would give potatoes a sell call on advances, especially if you're seeing the March month futures exceeding the 1140 odd levels. I would like to go short in very small quantities, and I would expect to square these positions at the sub 1100 levels over a period of time.
Fair point. Let's also take a look at the coffee prices, because remember, the Brazil drought is something that has taken the prices of sugar, coffee and also soybean on the higher side. Joining us to talk about coffee now is Hamid Haq, who's Managing Director, Tata Coffee. Mr. Haq, hi. The Arabica coffee prices have gained quite significantly, up 23% in this current year. What has been the impact of the same on the Indian prices?
You see, what will happen, India has just completed its harvest. Okay, Arabica harvest has been completed, and the what you call Robusta is on. I think we should complete by about 20th or by end of February, the latest. Whereas the Arabica crop has been very good, the Robusta crop is not up to expectation. There has been a shortfall across the country. So all this volume of coffee will actually now be sold out of India. So to that extent, people who have not taken large futures position, they stand to gain by this increase in prices.
Well, that's a win situation for sure, Mr. Haq. But what is the scenario really with the Brazil crop estimates? How much of a decline in the crop are we seeing from here?
No, I'll tell you, let's look at there are two parts to it. One is let's look at the fundamentals. What has happened, Brazil was actually predicting, anticipating a crop of 60 million bags, which is being the on-year, would have been a very, now that has been dropped between people, between 15 to 10%. The lowest is one group that has come in at 51 million bags, is making 15% shortfall. Now that is based on three solid factors. One, that coffee bushes have actually been overbearing for 2 years. So third year, being a fruit crop, it has to adjust. Seeing that and the low prices that was prevailing in November, December, a lot of heavy pruning has been done in Brazil. So there's a fundamental issue on shortfall of supply, and that has been compounded by one of the most prolonged drought in the month of January and right up to February, which has again affected the crop. So if we move from 60 million back to even 51, 52, we go from a surplus situation, which was the closing stock, to a deficit, small deficit, from a small surplus to a small deficit.
Mr. Haq, a final question then. What's your view on the prices going ahead? Because we've moved from a slight surplus to slight deficit, as you are putting it. Will that make a lot of impact on prices?
Well, I'll tell you what. Even if we have actually moved up from 105, 108 cents to 135 to 140 cents. I think we've already moved up. So whatever the lag was there. The further movement up, it could be, 15 cents is actually basically, if you look at the intraday trading, it's coming through. A lot will depend on the position that the funds take. We are studying this, so I may be able to come back exactly, our people in US, etc., we're studying which is the way the funds will go. But at the moment it looks good. So another 10% is only, will take it up from 140 to 155, which is no big deal actually.
All right, Mr. Haq, we'll let you go at that. That's the view coming in from Tata Coffee. From the current prices, another 10% of a run-up is not ruled out as far as the Indian prices also go. Let's talk about the sugar prices as well then. And while the Indian prices have been under pressure, the government sources now tell us that the export subsidy for the raw sugar to face WTO norms test as well. Remember, the Commerce Ministry will examine if the proposal violates the Uruguay GATT agreement. The Cabinet will discuss the proposal post the Commerce Ministry inputs on the same. Remember, we have had the informal EGOM proposal of export subsidy of up to 4 million ton of raw sugar, and that has been deferred for 5 meetings now, and this is what finally is coming into the market, that the Cabinet is considering the proposal and they are awaiting the Commerce Ministry inputs on the same as well. Vijay, how would you look at that? Because the market has been going back and forth on expectation of these, and now there is a possibility that it may not happen if we are not actually passing on the WTO norms here.
Well, Manisha, this is likely to add to the already volatile sugar futures market, and I would still maintain my view though that 2650, 2640 odd levels in the mid and far month futures still remains a good buying level. In spite of the WTO norms, I think we are likely to face a situation after the elections where sugar prices, which have been compressed for far too long, are likely to spring up. And at this point in time, as we stand, I think 2975 to 3000 levels on the NCDX mid and far month futures seems to still be a viable target. So sugar is still a buy on dips as far as technical charts are concerned.
All right, so with that positive views coming in for most of those agro commodities.